The Bureau for Economic Research's Manufacturing Confidence Survey has illustrated that a more competitive rand is conducive to the performance of the manufacturing sector. The index reached 42 points due to low domestic demand and increased input costs. Kunrad Besadenhout, Executive Director at the Manufacturing Circle, joins us now to discuss how conditions in the manufacturing sector can be improved. But before we get there, talk us through the movements on the rand. It's risk off again. We're at 9.15 on dollar rand. We can expect it to go lower into US trade.
Yeah, I would expect it to soften. The reason is partly risk off, but partly because of the nature of the weakness in the markets. It's much more commodity related. And so, as we know, we've seen weakness across a broad range of commodities, not just gold. And that South Africa is seen as a commodity currency, and therefore all commodity currencies are coming under a little bit of pressure. So it sounds kind of a little bit counterintuitive, but we're just picking up some weakness because we are seen as a commodity currency. But
now it's going in the right direction for the manufacturing sector, and perhaps you're going to give a little more detail on which manufacturers are wanting a weaker rand, which I believe is tantamount to a more competitive rand.
Yes, well, you also don't want it to go too far. I suppose there's always that risk. But the manufacturers that we represent are 42 of the bigger companies in South Africa, currently representing around 200,000 or just a little bit more than that job opportunities. But of course, we speak for a broader manufacturing sector. Of course, there's always some that rides on your coattails, and some of the smaller ones that we're hoping to incorporate in the near future.
David,
which are the biggest manufacturers?
You wanted to find out a little more detail.
Do you include places like Sasol or...
Well, Sasol, of course, is no longer a member of ours because Sasol, as I recently said, prefers a stronger rand. And the majority of my members seems to have consensus around it needing to trade at a little bit more.
So what's the sectoral bias? What sectors are we in?
There's a number of them on automotive glass, there's automotive glass, architectural glass, there's structural steel, there is electrical components, there's the bigger engineering firms that are there. ArcelorMittal is one of our members. So there's really a number of the big players across sectors. There's one or two pharmaceuticals, there's clothing and textiles, and so on.
Across
to be a member, do you have to want a currency to be weaker?
Well, it is a consensus around between the members at the moment. They are saying that when the rand trades between 9 and 9.50 to the dollar, then they are able to compete better. Of course, the volatility is still a problem, but we've seen it trading at those levels for quite some time now. And as the BR index today showed, they seem to be a little bit more positive.
Okay, so the BR index sits at 42 at the moment, and there was an improvement in the index in this quarter, and that is supposedly related to the currency weakness. If I go back 1 year, first quarter last year, the BR index was higher, suggesting manufacturers are more confident a year ago. The index was at 47, and at that point the currency was at 7.75 rand, a lot stronger. So a year ago, the manufacturing sector was a lot more confident than it is now, with the currency at 9.50 rand.
Yes, look, I think that one must forget that the rand is only one factor. There are a number of factors that create a conducive environment for manufacturers in which to grow. At the moment, I think the weaker levels of the rand is providing a little bit of a cushion to them in terms of the demand from the export markets, which, as we know, is not that great at the moment, but at least it's offsetting some of the difficulties that they've had in the past from competitors from other countries where currency manipulation does happen, and it also offsets the weakness of demand in our local market for locally manufactured products in light of unfairly incentivized products flooding our market.
So this is ultimately about currency manipulation. It obviously is, again, a debate point.
Well, it's a complicated issue because the stronger rand also prevents imports, as you say, and therefore local manufacturers or local consumers go for local products. What I can't understand is in certain industries like the automotive glass, is that glass manufactured here or is it imported glass?
Well, we manufacture a small amount of automotive glass in South Africa still. And that particular industry is under huge amounts of pressure. There's not a lot of people employed in that industry, but there are still some. And if it is not for for certain trade remedies that were recently applied, we would quite possibly have seen disinvestment in that sector and imports have taken over.
To what extent do you, sorry Bronwyn, to what extent do you think it becomes a bit counterproductive? In other words, you argue for a weaker rand. The weaker rand leads to high inflation. The high inflation leads to higher wages. The higher wages leads to uncompetitiveness, which then argues for a weaker rand, and we end up in that downward spiral. To what extent do you think that plays out?
Well, I think the sentiment from their side seems to be that that there's a level at which it's optimum, and to reach it, you would where we are now. But certainly, you know, if it goes further, there would be problems. But that there would be some interim adjustment that you would have to suffer to get there. But
so you would want a weaker rand, then stop it weakening.
Well, have it maintained.
That's quite demanding.
Have it be stable at a particular
so
level.
So what is the best level in your book for all your manufacturers? What would keep them happy?
As I said, the consensus from their side seems to say between 9 and 9.50 to the dollar.
Still a wide range, isn't it?
There's just one issue at the moment, and I think this is a concern, and it's one of the points that we have to actually digest and discuss at the moment, is that we have a huge Japanese stimulus program taking place now, which could create a massive amount of liquidity that will look for a home as people start to sell out of Japanese bonds and start looking. We could find huge flows here that could, I don't know where it could take us. You know, we're in a little tough period today because commodity prices, but a lot of analysts are talking about a rand that could actually flip back to 8.50 or even 8, all things being equal.
Well, as I said, I mean, there's certainly on the monetary policy side, there's been some, from some quarters, there's been an argument for some time to say that we need a review to see whether it's optimum for where we want to take the economy. Because there's certainly some things between NPC, macroeconomic policy, and some of the other development plans which do not rhyme, we know this. But there's other stuff that we need to look at too, domestic cost pressures. We need to look at productivity because it's not kept apace with wage increases. And then certainly market access is a huge issue that we need to address because our traditional export markets are not performing as they should. And access to our BRICS markets have not happened as we would have desired, and other emerging markets as we would have desired.
Just a quick one, is there any chance we're going to see the rand hanging around 9 to 9.50?
Yeah, I think that the rand overall remains vulnerable because of this massive current account that we continue to run and this huge reliance on foreign investment flows. So structurally, the rand is at risk of weakening, and that should
to 9.50?
Yeah, that's possible. In the shorter term, though, you're going to go through a phase in South Africa, what David was talking about, partly because we're going to import less because the economy is slowing down, and we may attract some of the money from, say, Japan. So in the short term, we're saying the rand can actually strengthen. In the medium term, short term, 3 to 6 months. Medium term, the rand is vulnerable. We're running big current account deficits.
A quick one, we've had a viewer saying, is Exxaro a buy? Please ask both David and Kevin for their opinions. Mr. Shapiro.
I hold a lot of Exxaro in my clients' accounts, and I'm actually, I don't know what to do.
Buying more? Are you buying more?
I actually don't know what to do. You know, when you don't know what to do, you just sit in the sideline and look dumb. So I'm just sitting on the sideline looking dumb.
All right, well, that's not going to give our viewer much confidence.
There's some good mining stocks out there, and I would add, you know, it's not as if that these companies are fundamentally anything wrong with it. Exxaro is one of them. The problem is that the macroeconomic dynamics are not conducive to owning these stocks right now, and I'm not convinced they're going to become suddenly a lot more conducive.
So translate that into what? Don't buy?
Don't buy now.
What about if you're holding? What about if you are David Shapiro? Help him out. He's sitting on the sidelines dumbfounded.
I think that the prices have run a little too far down relative to the fundamentals. In other words, I think that they're oversold and people are reacting. If you've got courage, you could start to look at
what's your advice to David?
Well, my advice is that you can buy in at a better level.
He's already
in the future.
He's
in which
already
case he could save himself some money by getting out and then going back.